Welcome to TradeTheMBI.com. This is John's reports for the 8th of March. Well, and a little weakness that we were recognizing as it was expanding with the falling green, rising cyan, broke through the ABM yellow, or gold as I like to call it, and we knew the several levels going down in between. The 62 level was already marked there, and then obviously that 35. We've only dipped as low as, so far 43 in the pre-market. Yesterday it was right around the same. Of course, we're ending with the contract rollover for March moving into the June contract from a future standpoint, but just from a market relation, last positive extreme we had was back over here, which had already been filled, so nothing special from that standpoint. What we did have was the breakout to the 28, and we knew that it would come back to at least where the breakout point was and fill that back in. And this 27.35 really represents fairly that line. It just sort of says, okay, this was after the consolidation. We broke out, moved towards the 28, got up to the 28.20, right like we were looking for, and then boom, filled back in. We just never caught any additional support. Once that gold and Azure met, as we were talking about, we flattened out, and that's what caused the cascade. And here you have it. Now we're dipped below the red line, so potential for us to continue to face more weakness is even stronger. And you can see pretty clear shakeout declining, though you don't have gold below blue when you have, well, you have it below main blue, which means that's never a buy, so that's a good one to keep in mind. And from an NQ standpoint, it was doing stronger than the S&P and probably held the S&P up to quite a bit comparative to where it's declined so far. But I don't really want to characterize this as healthy, unhealthy. It just reached a point where you got the signal that there was just a lack of interest, and at the wrong time to not have interest, because this is where the funds have the most money to deal with, and if they're not applying it, it's a clear indication that they're really second thinking the growth model and where it's at, and that's important to note. Couple that with euro softening, and you have a double whammy because that impacts S&P earnings, so it hits them at the same time, and we came right up to that 50%. Rolled over, and boom, revisited the dip below the red line, though we didn't need to. It already made low right here. Key question is going to be whether or not this sustains at a higher DOC red, which would make it more attractive from that standpoint, but at this stage it's still cleanly in a sell. And again, it becomes important to notice that no steel reset below the red that would give us cause to believe that it is going to rebound. And there you have the stabilization of gold right at, guess what? Oh, yeah, the retrace that we expected. No shocker there. Oh, intraday. It was kind of a strange day. I mean, look at this. This is the entire action for the day. I mean, we ended the other day with the short signal that was going on there. We had the pre-market. We had this wild, crazy little pop within it coming off of there, but these tend to happen. You'll get these giant wild ones where you've had just declining shakeout, all the major readings that, and then boom, price goes just the opposite of it, and you're like, what's going on? Yes, I had the dip below the orange in that, but you know, on this falling, typically with falling blue, Azure, and all that in the premier down incline, you don't usually get a sustained rally, and sure enough, it didn't sustain itself, of course, but in fact, immediately turned around and started lower, and it was an easy catch at that particular point. It was, where did I get my entry? I can't remember off the top of my head. Well, this is a problem because we have the conversion of what the futures contract reading is going to be versus what the old March contract is as it moves to the value of the new June contract. So there's not going to be an alignment with the readings because they reevaluate earnings and everything, and it changes it, so that's kind of not going to be helpful. But needless to say, it was right around the 38%, and then as that decline took place, we came down here. We had fairly decent, so when we had that dip below the negative 13.5, I'm looking for that yellow cross that also produces plus 2.5 point. Now in this particular case, that's sort of overridden. You get 21 to 17 in the bar previous 21 to 20. So not enough on this bar, plenty on this bar, and then the key for this is that you have gold, not gold, you have green over cyan, which becomes the powerful move. Now, did it last very long? No, because immediately ended up with green fading. Now, this, you may or may not like this from a short standpoint. What I already know is that when I've got this steel this far separated and never having come from below, I'm not looking for this run to go into the stratosphere. So the question is, okay, do I want to catch it on the way back down or a little earlier? Because sometimes you get towards these resistances and it's like, I just recognize that 38 was a reasonable place to add. It did go all the way up to the 50 before it started to turn around and then produced the exact same dip. But theoretically, you could continue to wait for that steel to completely drop, but you're going to miss a couple of zones. And then the problem with that right here, waiting all the way into this bar, with that crossover is that you're right at a previous algo level at the 2752 and a half. So your potential for turnaround pop is real. The advantage in this particular case is you didn't get any steel reset coming back below, so you knew that it was likely to be short-lived. As far as any up push, and sure enough, we continued the down move a little bit, then you get what equivalent would be your buy, which is the cross of the steel coming above, same time green moving higher, red moving higher, and then the orange dipping below, and trying to achieve the same thing. But again, it doesn't happen until late and immediately is rejected, and that's what's leading to the current lows, was this rejection right here, right at that spot. And then you're like, oh, it's a nightmare, look at it, went up after the rejection, what the heck's going on? And that happens a lot. You'll get sometimes 2-3 bars before it breaks down. In this case it was just 1 bar, and then it finally collapsed. And that's that last draw, looking for that last best price they can get to short into the pump there. And this becomes the issue with these negative 13.5s. In this particular case, I talked about this one before. If we look at the actual shakeout reading coming back over here when we dip below the red, you'll see the histo is minus 15. That's important because when you get that crossover and you have the green, these tend to have a little bit longer leg as far as a run move. Yeah, you may not call it 4 or 5 bars, but given what we saw for the whole day, I mean, from here to there, it was tiny volume. So it was fairly decent. And you can see we're moving straight down here in the pre-market hours, but it becomes a significant view if this was higher. It kind of leads you to the understanding that, hey, I've already reached an almost overbought, and you can see that developing here with the gold on the extreme histogram, almost turning into positive extremes, meaning you know, you're getting peak algo activities starting to take place right at these levels. And so the turnaround from literally a 50% move back up from, you know, the full decline, not bad. And now we've broken into new lows. The question will be the first pivot for this red and whether it's going to be a higher P2 or a continued decline. This one being called a P2, it technically is, but, you know, in my view, well, you can see that it's not going to give you any cross. You don't have any dip of orange below, and in this particular case, you even have green about to cross below red. So all the warning signs, which also worth paying attention to when these happen at no buy signals, because if it's a no buy signal, it also lets you know that's not entirely a short, but the preponderance of movement indicates that, yeah, you're probably going to catch a lower move. For me, just the rejection of the green cyan meat on the breakout like that is good enough for me to be interested at that particular stage. So, as always, I will keep putting up charts. I still have regular problems with the Skype thing. I keep unloading and reloading, and this doesn't seem to help. I might have to just try and go back to the older version, even though they say it's not going to work. What are you going to do? But we'll figure it out. Always do. As always, though, oh, let me show you the 50K, and that decay was going on through here. what you see with this is that from that initial buy, it's like when we had that DOC spread in the Malays, and we just kind of went blah going across like this. Hasn't changed, so still negative from that standpoint. The difference in the color change is what you're seeing is that if this were by configuration, that would be equivalent the extra stop. This doesn't have in it yet because I've been making adjustments to it. I have removed the baseline of breaking the low to convert. But that's where it would typically have ended based on a ATR stop concept. So under the old configuration, it was just interesting to see because then it goes into a neutral because it's not something that it wants to buy in a particular case. And these eventually will just get turned into red color in that as you'll see them. But still, very interesting to see it and very cool because it's capturing it quite nicely. Continuing to have that one evolve. As always, though, I will put up what I can on Skype chat if there's anything relevant. Hopefully we get a little... I can't say that the volatility is not great. It's just there just wasn't a whole lot of activity as far as volume-wise movement. But certainly was nice in the right direction. So, as always, trade well.